Mark Selby, how are we, sir?
Mr. Matthew Gordon doing very, very well.
I am glad to hear it, sir. Glad to hear it. And so interesting times out there. US doing deals with Indonesia. How are you reading that situation?
Yeah, the again, we're all in the queue. Canada is due for a deal soon. So a 19% tariff, that's obviously quite helpful for those of us who will probably have a lower tariff rate than Indonesia that's there. The thing on the nickel market and the bigger, is the bigger part is the fact that so much of that production in Indonesia is Chinese controlled. And as part of the big, better, beautiful, whatever it's called,
Big Beautiful Bill
the
Act.
big beautiful bill. They modified a bunch of the Inflation Reduction Act stuff, and one of the things that actually got tightened up was around Chinese ownership. So so it's still a real TBD. And again, I don't think the U.S. defense industry is going to rely on Chinese controlled nickel from Indonesia anytime soon.
I don't think so. We'll come back to tariffs and deals in a bit. Let's get the nickel news. What's happening with nickel price, first of all?
Yeah. So again, spent a lot of time in our familiar, 15 to 15,800 a ton range, where we've been for most of the last time period with a few blips. We tested the bottom a couple of weeks ago. We've now moved up into the upper half of that range over the last few trading days. What's interesting is again, there's still a sort of a lot of negative overhang on demand and blah blah blah. But ultimately, HPAL production is a thing that's driving production higher right now. But even with all of this big ramp up in production, prices for the MHP product is what comes out of a HPAL plant is still sitting close to all time highs. So that obviously suggests that whatever's coming out of there is being absorbed by the market, converted either into LME nickel or converted into use in the battery market. I think what's even more interesting, and again, I would encourage people, when you look at things, is to look at sort of adjacent materials to get a sense of, to confirm trends in terms of what's going on. So what's really interesting in the battery space is, lithium's been bouncing off the bottom, back to multi-year lows for the last 12 to 18 months. And we've seen a sharp move up in the last couple of weeks. So I think lithium prices are up 20 to 30% during that time frame. And the thing to remember is, when you go through a destocking period, particularly, when we went up that 10x parabolic run in the lithium market, people panic, people pile up all kinds of stuff. And I think there was really a really big overhang right throughout the entire battery supply chain. And so, I think we're finally clearing this out. Again, Chinese buyers, the way they will only buy what they need until they think the price is going to go up, and they start piling in the market. So that's why you end up with these sharp changes. So again, it's only been a couple weeks here, but I think we may be finally through. Finally getting back into a restocking cycle in the battery supply chain, which will be good for all the battery materials going forward.
Okay, so is it only, we're kind of very focused on China, Indonesia, Philippines as ever, but is it only the battery or cathode manufacturers in China that we look to kind of get a sense of what's going on destocking? Is there actually any data out there that's telling us like who is doing what buying?
Not at this point. You get sort of China as a block. You get Korea, to some extent, but lesser extent, information on that, which again, I think is part of the problem. I think we're seeing in terms of nickel cathode production that, a lot of that material more of it moving to Korea from being produced in China. But again, looking at these China stats, China's, the bulk of the battery supply chain right now. So it's a pretty interesting indicator. So, fingers crossed, and something we'll keep an eye on over the next few weeks to see how that all plays out.
Right, and just so if you don't mind, so explain how I should say it has nickel price, but very broad statement. But nickel price in Indonesia the same as nickel price as in Philippines when it comes to ore. I mean, obviously two different things, but
yeah. So that's the piece of again been tracking through the through the spring and summer to date is really, the fact that we've seen, again, as nickel prices, have come off over the last few years, but we're still double where we were in 2016. But what's interesting is we've seen ore prices move up to close to 2-year highs. You have to go back to the fall of 2023 to see ore prices higher than where they are now. And obviously nickel prices were a lot higher at that point in time. And so, that's the lever that the Indonesian government has, is to basically manage ore supply and squeeze prices higher. We talked last week about they're changing the licensing from 3-year licenses to 1-year license, giving themselves a little more leverage over it. Now, what's happened is ore prices have gone up, but Tsingshan and some of the more successful ones are using this price squeeze to keep NPI prices and stainless prices. They're pumping out lots of it and keeping prices relatively low to try and squeeze out their competition. They can't do that forever. We popped back up in February to 16,500 a ton. And then we got hit by all the Trump trade nonsense. But again, I think, what I been saying for the last few months is we should see a move back up to that 16,500 range, by August, September. And so, the price action that we're seeing right now, seems to suggest that's still the case.
Okay, and talk about data sources. You talked about INSG numbers. Ever since we've been talking, what are they saying now about current price, and do they give any indication of what futures as well?
No, they only put out a forecast twice a year, and the challenge with that forecast is they never put a supply disruption allowance in, and so that makes the number not make sense, because every other commodity group does that, where they don't risk adjust the production that's there. So they put out their latest bulletin for July, which gives you the year-to-date May number. So demand up 6%, and supply again, 100% driven by Indonesia and a little bit by China, up 11%. The challenge with that is when you look at the surpluses that they've reported now since the end of 2021, and I'm going to write a letter to the INSG, to really highlight this, is, at the end of the day, whatever the market surplus and deficit is should ultimately come close. It won't come exactly, but it should come close to whatever the overall exchange stocks are, unless you can point to a specific trader or specific producer, holding large stockpiles of material for a very good reason. There are times where that's happened. We saw that in the aluminum market 4 or 5 years ago. But again, there was those conditions to hold that much metal off warrant are not there today. And so the challenge is, if you add up the surpluses, and this is the issue with a lot of analysts, you've got over 500,000 tons of surpluses over this time period, and yet there's less than 250,000 tons of nickel in total on both exchanges. So, so they're underreporting demand or over-reporting supply. And if we've talked many times, when you build up a new supply chain, there's a lot of in-process inventory, and I think that's what they're missing, and they're effectively underreporting demand. So, again, if you take that surplus and have it, things are not in really that bad a shape.
Okay, the thing which does keep throwing off, and we started with it, is tariffs. The conversation around tariffs. So we talked about, obviously, Indonesia coming to have an agreement with the US, but the US is hard at it. So it's not just nickel. We've got rare earths. We've seen a big bump recently. There's this very, very clear, get China out of the supply chain message coming across. So rare earths, graphite, nickel, well, you name it. We've gone to war. China is dumping American debt for fun in big numbers. It's getting pretty serious out there. So what are the knock-on effects?
Yeah, so that's the key piece here is we've talked about the rare earths over the last couple of calls, and again, we're seeing real action by government. There was a lot of talk and a lot of pretty please, would you build more rare earth, build more graphite, build more nickel and cobalt, and we, again, in North America and Europe have really seen very little new supply come online. They're now getting serious about it. China using rare earths and some other metals like antimony and some others, as weapons. As okay, time to stop fooling around and time to get going. So we saw the significant deal with MP Materials last week, and then a week later they imposed significant 90% plus tariffs on graphite imports from China, into the United States. So it's going to be painful for users of graphite in the interim, but it's those kinds of measures, that are going to be required to be able to provide the space to allow North American graphite production, to get going. The Canadian government back at the end of last year provided funding to Nouveau Monde Graphite, which is one of the leading graphite projects in Canada. And the key piece is, if you look at Chinese domination of various materials, rare earth processing and graphite processing is something where they're over 90% plus. Well, the next couple in line there are nickel and cobalt. And so, we'll see as the government meetings go through the next few months, what comes to pass. But again, governments are finally getting serious about critical minerals. You are going to see money to start to flow, and once that starts to happen, I think you're going to see a significant re-rate for those companies that have those projects that can take advantage of that.
Yeah, and I think obviously the other metal in there, cobalt. I was talking to Electra Battery Materials yesterday, and they've been waiting a long time for the government to kind of start moving forward. I think he's after 3 years, but it kind of feels that the light is at the end of the tunnel now. The recent moves will help companies like theirs to secure funding from government via grants and other mechanisms. But and you refer to MP Materials picking up money from the DoD, but also from Apple. So different forms of funding have needed to come into this space to fix it. And it kind of feels like that's starting to be the case as well. I mean, you've gone through a kind of interesting sort of financing stack yourself to kind of put this together. Do you see more of that happening now?
Oh, 100%. No, I mean, the provincial and federal elections that we went through in Canada, the added threat for Canada is the big orange monster in the White House. And so, that, again, that's even more focused Canada on, okay, what, we need to get some of these projects moving. This is one of the few things that we're really good at and have a global competitive advantage. And so we should take advantage of it. So, again, it's been the discussions with both the provincial and federal government have been going very well, and we'll see how things roll out here through the fall. So
okay, well, this comes neatly on to. So, what have you been up to at Canada Nicekl? A couple of announcements out this week.
Yeah, so I was glad. So we put out. So again, Agnico Eagle back in early 2024 funded $35 million of exploration. So we drilled out the Timmins Nickel District. We believe it had the potential to be larger than Sudbury. And so, what was great with the two we just published, we now have a total of six resources, and we'll have 3 more to come by year end. But with that, those 6 resources were over 9 million tons of measured and indicated, another 9 million tons of inferred. And, the quoted number for the total endowment of Sudbury since it was discovered was roughly around 19 million tons. So, we're on track to really truly become the world's largest nickel sulfide district. There's a couple companies that have some other projects in the area. You add them in, and we're over that Sudbury number today. So, it's been great to see that play out. We're, quite happy, with the resources that got published, and we've got 3 more big ones coming down the pipe this fall. So
okay, demonstrating the scale, it's there. Okay, let's jump onto others, such as the Russia's Nornickel project.
Yeah, so Russia, Norilsk is one of the, now Nornickel, is one of the big one of the world's big producers outside of Indonesia. Again, 25 years ago, they produced 20% of the market. Today they're about 6%. Anyways, they cut their guidance back, by about 5%. There's, again, with all of the restrictions on Russia, they're having trouble getting some components. They need to do some rebuilds and expansions that they need to do to maintain production. So, again, the key thing there is, there's a big resource there, but it is in the middle of northern Siberia, and so it's a pretty expensive place to operate, and it had a massive environmental footprint, which the current owners are working to reduce, thank goodness. But it's still a long way to go. And, and at best, they'll be in a position to be able to maintain production, maybe have a slight increase going forward.
Okay. And Homeland Nickel.
Yeah. So this is a company that it was sort of within the different we have some common shareholders, and so they did a deal about a year and a half ago to pick up property in Oregon, in the United States, in the continental United States. There's only nickel in Oregon. You have some nickel in Michigan and in Minnesota, and then a few little bits and pieces elsewhere in the country. But this used to be the U.S. government back in the 1950s built a ferronickel smelter in Oregon to be able to have ferronickel production that's there. It closed back in the 1990s, 2000s. But again, the laterite's still there, and Homeland Nickel's picking up other properties around the properties they acquired. And so, again, Oregon's not the easiest place to do work, but in terms of this new focus on being self-sufficient in minerals, we'll see what happens. And again, they're able just doing some grab samples and came up with some pretty good numbers for what you'd expect at surface. And what was exciting was there was an old test pit that was probably dug in the 1950s, and 4 or 5 meters down, they were able to pull out a couple percent nickel, which is excellent grade for nickel laterite. So that's one to keep an eye on. It's relatively low market cap right now, but if you want an option on U.S. mining returning, that's a pretty good play at this point.
Okay, I'm going to pick up on something we talked about last time we spoke, which is obviously big companies offloading nickel projects, and the first one, BP, just on a deal with Lifestone, and followed up quickly with South 32 selling off Cerro de Matasso.
Yes. Yeah. So
tell us why. Tell us about it, but tell us why.
Yeah. So BHP did a deal with Lifestone about 4 years ago, when nickel was in near its peaks. And so they had an option to sort of continue funding. And so what's happened is Lifestone has basically, struck a deal to be able to buy BHP's interest out of the project going forward. So right now it's basically just Lifestone and the government in terms of owning this project. Again, dealing with giant companies sometimes is not always easy. So, having a clean ownership structure should allow them to go and do whatever they need to do going forward. Again, BHP exited their nickel business, back early last year. And the challenge is, I think for them, they may have always seen this as, some sort of synergy between the asset, their ability to provide some feed to their processing plants in Australia. But now that with those processing plants shut down, again, I think they need nickel prices north of $22,000 a ton before they'd look at reopening those plants. And so, it just doesn't make sense necessarily for BHP as a standalone investment, given, the scale of some of the other stuff they're looking at. South 32, selling off Cerro Matoso. This is one of the older existing operating ferronickel operations. I think it was built initially in the early 1990s, so it's pushing on 30 years. And as we've described many times before, it's very easy to high-grade laterite deposits. And so, they obviously, have been facing a declining grade profile over time. It's inland in Colombia. When it was first built, it was great because there was a natural gas pipeline nearby, which provided the energy and fueled power plant to be able to provide the power that you need. But the challenge is it's significantly inland, and any 30-year mining operation is going to have some environmental liabilities attached to it. So Crux, there was a story, I think about 5 months ago, that there was a Turkish billionaire, Robert Yildirim, who was looking to deploy $2 billion of capital into the nickel space. And so he's the one who picked it up there. So good to see it go into good hands. The other asset sale was Barro Alto, went into effectively Chinese controlled hands. So we'll see with that operation going forward. The thing that Yildirim has is they made a deal a few months ago for some one of the last high grade laterite ore sources in the Ivory Coast. And they have some other ferronickel operations. So I don't know if they're maybe planning to supplement some of the feed into this plant with the Ivory Coast ore or whatever. But they're picking up the production assets for pennies on the dollar, and we'll see where we go from here. And they obviously believe in the nickel market going forward.
So let's just look at the market and market disruptions. Obviously, the last 2 years have been easy to spot, and depressed market before that. It's been tough, but it does seem quite buoyant at the moment. What do you put that down to? Is it the effects of the tariff conversations, people having to start talking about how they do business. Because I know as a banker, I certainly wouldn't like the uncertainty, but I do like conversations like Indonesia is coming to some sort of agreement with the US and vice versa, to give me some sense of what the future holds. But all metals across the base seem to be on the up. We've seen advanced developers and producers, the beneficiaries of a little bit more positive thinking. I would say the explorers aren't quite in that category yet. But what do you put this kind of market effects down to? I mean, one, do you agree it's more buoyant, or beginning to be buoyant? And two, what do you allocate that to?
Yeah, I wouldn't use it. I wouldn't use buoyant. They are definitely on the up.
On the
from
up.
a very
Beginning.
from a very deep hole. So
Yeah.
we've definitely turned the corner, and sentiment is definitely improving. No, I think it's driven by number one, we just can't be solely dependent on China for all our raw materials. I think that message is now resonating with investors. Again, I think for those metals that have been beat up in the battery metals complex, lithium, nickel, cobalt, the Congolese government, solved that problem by, halting exports for a period of time. I'm not sure how they get out of that box, but, I think, again, a lot of, and again, I continue to see this is some smart investors who go, I think the bottom's in here. The risk return is much more tilted, skewed to the upside. And then if you look at the broader equities market, valuations in the mining space, are, a fraction of what they are in most other sectors. So, as deep value investors, there are people who are starting to look at this sector and say, okay, yeah, you know what, this is, again, the risk return profile just makes a lot of sense. And given some of the other macro stuff that's happening, people are starting to come back to the sector for the first time in maybe 15 years.
But I think for me, what I'm saying is, because of this, I don't want to call it alternative financing. I say different types of institutional investors are coming in. People writing bigger tickets are coming in, and I'm wondering if they're diluted or they are seeing the kind of mismatch between fundamentals and how the market is pricing things. I say, these kind of value investors, and that may encourage retail or lend some degree of comfort back to retail that actually perhaps certain types of company profiles can get funded, will be able to get over the line. And it isn't just a case of another 10 years worth of drilling and dilution, please. Do you see that? Does that psychology resonate?
That psychology is definitely happening in terms of, there's, again, we're not at the tidal wave here yet. And people are doing $50 million, $100 million deals, every other week. But, you are seeing, as I said, investors who may not have looked at the space for 15 years, in some cases 20 years. You have to go back to the mid 2000s before some of these guys got this excited about what's happening in the mining space. But yeah, it's the door's open a little bit, and hopefully it keeps open. And again, I think what'll help it turn it from sort of just the door opening quickly to a real sort of surge of investment is starting to see more government funding flowing through, right? Just go look at MP Material stock after the government announced that deal. Look at metals company after the U.S. government basically, solved some of their permitting issues for them. Those again, given where valuations are, those are the kind of re-rates that you can see pretty quickly. I mean, MP Materials, I think at one point, I haven't checked recently, but when I last checked, they added about they were $2.5 billion value company. They were $10 billion like a week or two later. So,
yeah, I think they went from $30 to just over 60. So they doubled. But the knock on effect, and this is there's a beauty, and it kind of I think validates what you said about the involvement of government funding, taxpayer funding, is that, Energy Fuels, who did not get a contract with the Department of Defense, but they doubled their share price in the space of a week as well. It was a little bit longer, 2 weeks. But, because of the expectation that the money is flowing and the people who are set up to be successful will be financed to deliver on that potential. And I think that's what people say. Like I say, I do think the kind of slightly more hit 'em and hype and early stage exploration thing. It's going to be a long time for that kind of cascades and flows down to that level. But it'd be nice to see these advanced developments, sort of, like yourself, obviously, to kind of see that capital available to you, and others like you, for sure. Because I think the sector needs success stories. We've come off the succession of absolute disasters until kind of gold went on a tear. Miners getting it horribly wrong. So yeah, I feel positive. I feel good. I think there's money to be made. More importantly.
Yep. It'll be a very interesting fall, that's for sure.
It will.
Yep.
Mark, lovely to speak to you. See you, and we'll see you soon. Okay.
Sounds good, sir.